Greetings, everybody. This is Christopher Messina coming at you from the Messy Time Studios, broadcasting as ever from the last free state in America, Florida. It is 10 o'clock in the morning on May 26, 2023, and I am joined by a fellow Floridian, Charles Hwang, Chief Investment Officer of Lightning Capital. Charles, thank you so much for coming to the studios.
Hey, thanks so much for having me.
It's a delight. We will dive right in. I think for those in the know, back in the green room a second ago, we were kicking around the ideas pertaining to big blockers and small blockers in Bitcoin, and Charles had some very cogent comments to make about that. Perhaps you could kick us off.
Sure. I mean, I use the analogy of big blockers and small blockers as the highway, where big blockers are the ones who, in order to relieve congestion on the highway, you want to just add lanes to it, where the small blockers use a different method where it's removing some data structure that they believe is not needed in there. The one thing, I'm always mixed. I do like what's been built out on the small blocker side, which is the second layer solution for Lightning Network. But the biggest argument against the big blockers, I would say, is that as you make the highway bigger, to run a node, it becomes more expensive over time. And so the solution to big blockers is always to keep on expanding the highway. But even, living in Florida, 95 is the main highway, is that you can only expand it so far. And before it becomes really prohibitive. And I think that's the biggest problem I see on the big blocker argument side. And I want everyone to be able to run a node at a low cost basis, like anyone in a developing country. I think in the US, we don't see it as a prohibitively expensive, but I want those developing countries to be able to run a Bitcoin node.
And that's helpful for those people who really don't understand the technicalities of how this would work. Maybe we could dive into that a little bit. So my understanding of the distinction between big blockers and small blockers was, granted, absent operational considerations, was more for big blocker, I've got a certain amount of data that goes into this message, this addition to the chain, and all that data is really important. And you crazy small blockers, you just want to sacrifice data integrity and take out really important information just to make the transaction happen faster. And I, as a big blocker, think, well, that's crazy. The entirety of the details pertaining to the transaction are what matters. I can't, for example, I'm not buying 1,000 pounds of wheat from you, but I'm going to leave the price up to you. No, I'm specifying the price and other things like quality and humidity and rat turds and all that sort of stuff. If I don't have that defined, I don't have a full contract. So, but that you're, if I'm hearing you correctly, that comes at a cost, which is the participation of other, or of a larger number of people running nodes is sacrificed if you need to have all that data included. Is that an accurate?
Yeah, so from my understanding of it, and this is where we would probably have to bring someone in technically, because the small blocker debate is the segregated witness, which is the signature, that there is, you segregate part of the data away from the actual block that is like unneeded data. So from my understanding, it's not valuable data that's needed. And then the idea, big block, small block came out really in 2017. That was before Bitcoin Cash forked in August of 2017. And during that debate, there wasn't a Lightning Network. And so idea is like once segregated witness was SegWit, which they call it, is implemented, then you have this ability to create a layer 2 solution called the Lightning Network, which we eventually saw. And that is where you could have smaller transactions facilitate on the Lightning Network and larger valuable transactions on the Bitcoin blockchain. And the way I see those functioning differently is that the Bitcoin blockchain is like final settlement. It's a wire transaction, whereas the Lightning Network is like the credit card transactions. It's Visa, MasterCard. It can handle 30,000 transactions a day, and there'll be no delay on it. You're not going to send a 50-cent transaction on the Bitcoin blockchain.
That's interesting. So that would be the distinction, and that layer 2, which in this instance is called the Lightning Network, for those barely technically capable but curious, let's call them technology curious, what in layman's terms would you say that actually means in terms of what a layer 2 network does in
Yeah.
relation to that kind of main chain of Bitcoin blockchain?
Yeah, so I think on the layer 2 is when we can start sending out faster transactions. We can buy different products, smaller value transactions in that. And that's where I think we'll ultimately see the adoption for us using it as Bitcoin as a global type of digital gold, digital currency in some sense. And I use currency in the sense that it becomes a medium of exchange and also a real storage of value versus fiat currencies. And so this becomes a real hard asset. And so, but you can spend it in a way where you can buy and sell things easily on that network. We don't have to wait for that long transaction to confirm, meaning at least 10 minutes. We'll confirm within seconds. The 10-minute block, and we've seen recently with this whole movement of ordinals, we caused a whole backup in the mempool, and we see all these transactions being held up unless you put an expensive fee on it. And expensive only in the sense that it's more than it's been on the average. And so what I mean by that is if you were to send, I think as it went as high as like you had to send an average transaction $8 to $10 to get confirmed within that 10-minute block. And if you put anything less, you would have to wait maybe an hour. Now, if you're buying something at a store, you don't want, and you're using Bitcoin, you don't want to wait an hour for the transaction
to go through, right? Tapping your foot while the people behind you in line are getting
I mean, when you use a credit card, when it takes 3 seconds, you're annoyed.
Yeah,
and
people are losing their minds. Let's go, come on.
That's right. And so can you imagine waiting an hour to get your Bitcoin transaction approved? Now, what's also interesting is that if it costs $8 to $9 for a Bitcoin transaction, well, if you're buying a dollar item, you don't want to attach $8 to it. And so that's where Lightning Network comes in. You attach a couple, it's usually a few Satoshis. It's really marginal. It's not that much. And where I see this happening is that because Bitcoin is final settlement on transactions, we might eventually, when we see the Bitcoin standard, we'll see discounts to use Bitcoin. Because as a vendor, you have no chargebacks, there's no fraud, you're getting it, it's like cash.
Right.
And so I think in time, we'll start to see that. But when I say in time, I'm talking 10 plus years. I don't think this is happening in 2-3 years.
Interesting. You mentioned a phrase which I think a lot of people will not be familiar with: ordinals. What does that mean?
So ordinals are this new thing that's happening on Bitcoin, which are like NFTs, non-fungible tokens, where you're attaching artwork onto the Bitcoin blockchain. And so I think there's been a debate too within the maxi community. Some Bitcoiners don't like ordinals, some Bitcoiners like it. I overall think it's a positive thing for Bitcoin. We're seeing more and more use cases because I do think the part I like about NFTs is not the digital art, but what you can actually use it for. You can, I think in time, we're going to see ticket sales on, it could be on NFTs, so Ethereum blockchain or Bitcoin blockchain. And I think it's a way to eliminate ticket fraud. That's one way, but it also opens up another door of collectible items, because what we're seeing is people do like digital collectibles. We see it with younger generation who are doing it within games. And if they're doing it within games, I think this translates well over into Bitcoin.
Sure, and that made, one of the most fascinating use cases I found out about going back to years ago. World of Warcraft was really the first time where there were private capital put up money. A lot of it happened in China, as it happened in terms of gamer farming, where people just play World of Warcraft, rack up things, take it. Now the rules of the company said that you couldn't actually transact for dollars, but they couldn't stop it, right? You could transfer your in-game gold or your magic items or whatever to another player, and if that happened to be arranged offline where someone sent you actual real money, well, they couldn't really stop that. And of course, that sort of transaction has just became lightning fast with the advent of cryptocurrency, right? So I find that something that most people who don't pay attention to, they hear a bit of fluff about the metaverse and all this, but like this virtual space monetization has been going on for a long time.
Oh
And
yeah.
it's only getting better, right? And when you laugh at it, you're playing a silly game on your phone, the company will offer you the right to, buy a bag of gems for $19. And like, how drunk could you be? You're like, that's a great idea, right? But people do. So for that sort of stuff, NFTs are brilliant. As of course, what we're doing in the real world with hard assets and mining, real world mining, hard rock mining, we think it's a hugely beautiful, useful package, right? I had one guy we were talking to about our the NFT that we're issuing for our mine in Greenland, and I'm talking about it. A little plug, talking about that at London Blockchain next week. But it's hilarious. He said to me, very experienced investor, he said to me, I don't invest in NFTs. So that's fascinating. When Enron went bankrupt, did you say, I don't invest in equities? What are you talking about? It's just a packaging mechanism. There's nothing inherent about it. It doesn't have to be a picture of a drunk monkey with a cigar. It can be titled to a piece of real estate. So I think a lot of that will be shaken out and the use cases will appear more robustly. And does that, not to put words in your mouth, but it's a question. Was that part of what motivated you at Lightning Capital and the work that you've been doing in the space for years? Like, when did you fundamentally first see, or this is a huge opportunity, this makes sense to me? You refer to crypto as hard assets. Like, how did this all kick off for you? What was your big?
Oh yeah, I mean, so that's a good question. So I'll start off that I was an economics major in college at the University of Rochester in upstate New York, and I learned early on in my college years that the US dollar was worth zero. It has no intrinsic value.
Right.
And it only has value because we all agree on it. And the moment we don't agree on it, and that would be a scary moment as an American, for me, right? Like we would not be the global currency. And right. And so that is something I always looked at, where looking at investments, I started off my career as an equity trader in traditional finance, and I was always looking how to invest. And in 2013, I came across Bitcoin, and I read it just high level. 21, it's capped at 21 million Bitcoin. It is because it's capped out. I realized that this is a hard asset, that this is one where it is actually investable. There is storage of value, and it meets the three characteristics of real money, which is, medium of exchange, storage of value, unit of account. In reality, fiat currencies are not a storage of value. It doesn't go up in value. It depreciates over time.
By design, mind you.
By design, that's
by
right.
design. They call it inflation targeting, which is just, we'd like to only steal 2 to 3% of your money every year.
That's right. That's right.
That's it. That's it. And if inflation goes to 9%, well, the government has stolen 9% of your money.
That's right. And that's the scariest part. And so unless you have real hard assets, such as real estate, anyone who bought real estate has done very well for themselves over the last few decades. And I do think that Bitcoin becomes one of those hard assets. It's just early in the adoption phase that's why we still get that volatility. But I do believe in 20, 30 years, when we have mass adoption, Bitcoin becomes your savings account, where it actually increases in value over time. And it's pegged to a basket of goods. And that basket of good increases as we see it grow over the years.
Well, that's an interesting statement. So in your mind, Bitcoin is a hard asset and will grow in value because it's pegged to a basket of goods, or just because in and of itself, it's limited to a fixed amount?
I think it increases pegged to the basket of goods. So it's almost like that shopping cart meme that you see, like over time, that shopping cart fills up with one Bitcoin 2010 barely bought you anything, bought you nothing. And
Right.
then as the times go on, your shopping cart starts to increase dramatically. My belief is that in 20 years, when we have mass adoption, and that is an if for some people,
Yep.
I think it's happening. And so that's why I say when it happens, that we're going to see Bitcoin as the international savings vehicle. That when you don't want to spend money, you save it in Bitcoin, and you're going to see your basket of goods increase. Who knows what the rate would be? Let's hypothetically say 5%. So it grows 5% a year. And so regardless of what other central banks are doing, you can invest in Bitcoin and know that that's the rate it's going at.
Well, of course, but that whatever growth rate you're talking about, by definition, is relative to some fiat currency you're judging it against, right?
That's right. It
Uh,
will be on that. But I also believe that in time, the issue of, I'll step back. The issue is we all think in terms of US dollars. Regardless, when someone goes, hey, how much is Bitcoin today? You're
Right.
asking me how much is it worth relative to the dollar?
Yeah.
But no one's thinking in Satoshis. And I think it's a generational shift that the younger generation are going to think in Satoshis, and they're going to think, well, how much is it in Satoshis? And that's why I'm saying it takes 20 years at least.
That's
Because
interesting.
of
Of
that
course, it has to
generation.
get past this period of wild volatility, right?
That's right.
The mass market is not going to think of this as a savings vehicle when it goes from 2 grand to 80 grand to 3,200 to 25,000. Like that's just nuts.
That's right.
They're not going to. Now, would that be true for other cryptocurrencies, or is there something unique about Bitcoin in your mind that would?
I think this is something very unique with Bitcoin. I think Bitcoin becomes eventually the Bitcoin standard where internationally, it'll be so nice when we travel internationally and everything's priced in Satoshis that we don't ever have to convert in any currency, because they realize, they being other people in the world, realize that this is the hardest asset in the world, and I'd rather take Satoshis than a fiat currency.
That's interesting. Yeah, I just checking out of a hotel in Zug, and the first question was I paying in Bitcoin?
Mm,
And then it was, Swiss francs or dollars, whatever I wanted to pay in. But the
yeah.
first option was Bitcoin, which I thought was pretty fascinating.
Yeah, I think it's over time. And I wonder if they accepted Bitcoin, they would convert to the local currency. Because what I would like to see is anyone who's accepting Bitcoin to actually hold Bitcoin in their treasury.
Well, it's a fascinating issue, because I had James Falk on the show recently. He wrote this great book, Financial Cold War. I don't know if you've read it or not. I'm not really pitching it for him, but it's
Oh, okay.
a
Yeah.
great book, brilliant guy. And he writes a lot. He lives in Hong Kong, and he writes a lot about a kind of a dual reserve currency world, because the Chinese, of course, are pushing the renminbi to be
Mhm.
a parallel reserve currency against the dollar, which was frankly enshrined there during the Bretton Woods Agreement. Right? It was an
Right.
accident of history that the United States had the only functioning industrial economy in 1946, and that became the anchor for everybody else. With hindsight, maybe that was an error, but that's what it's turned out to be. And the Chinese, of course, especially in Asia, they think it's more rational if they're buying lots of goods from neighboring countries, and they're also taking investment from neighboring countries. Why is Vietnam, Cambodia, and China, why are they translating everything to the US dollar?
Right.
That's not relevant to them. So you can maintain multi units of account, right? And you can, sophisticated trading houses can do that all day long. And when someone says overall, did you lose or gain money or gain profits? According to what? Right? I may have made a ton of money in baht and ringgit, but you're telling me that I lost 32% in dollar terms. Well, I don't care. I'm not translating into dollars, and I'm buying everything in local currency. So I made a 38% return last year. According to you, I lost 48%, but I don't think so. So it's going to be an interesting point, an inflection point, where if you kind of take the view you're taking, that eventually it does become digital gold in a sense. You go back to a standard that is linked to a thing. That thing was shiny bright metal for 2,000 years, and now it'll be
Bitcoin.
yeah, it'll be Bitcoin.
Yeah, and to expand on that, my theory on this is that any country that starts to accumulate Bitcoin in their treasury will end up being the superpower in the future.
That would be
Right,
good news for, was it El Salvador? Who did the
El Salvador is one of them.
right?
But what I also think is happening that is not talked about in the media is that the Middle Eastern countries are doing this.
Right.
Because that is a rumor that I'm hearing, especially UAE. What they have been doing is building out large mining operations to mine Bitcoin.
Sure, yeah, cheap energy.
They have cheap energy, converting their energy assets into Bitcoin, which might be more profitable than selling the oil into the open market.
Right. You referred earlier to this idea of energy arbitrage, right? Wherever it's cheaper to get energy to create Bitcoin, you should do that.
Oh yeah, for sure. I think if you can find cheap energy sources, it makes sense to put miners up there and convert it into Bitcoin. You're going to get a lower marginal cost of producing a Bitcoin than to buying it open market. And it just, to me, it makes a lot of sense.
So what is your response to pure skeptics who say it's a fun exercise, the code is brilliant for becoming, cheap payment rails for micropayments, and that's a great use case, but in and of itself, that doesn't mean a Bitcoin is worth anything. No one talks about, what's the value of your HTML? What do you mean? Well,
Yeah.
when you're using HTML to put stuff up on the web, well, how much does your HTML cost? Like, it's a nonsensical question. So, what do you say to people who say, if Bitcoin is worth $50, it's $50.08 overpriced? What's your reaction to people of that view, that this is an interesting experiment, but it's actually fundamentally worthless?
Yeah, I think part of it is, I get the argument that this is just technology and that this technology doesn't really have value on that side, but it comes down to network effects. Network effects are huge, that as more and more people all agree that this has value and that we attribute value to it, it starts to grow in that. And as we add, it's Metcalfe's law, as we add more and more users, you start to see this network start to increase in value. And that's where I think it's huge. It's back to US dollar. Why does a US dollar have value? And most people argue, well, it's backed by the US government, it's taxed, the military protects the value, which I understand all those arguments. But the moment the world decides it has no value, it's worthless. It's just a piece of paper that's made out of cotton. And so that's it. And that's where I think we'll see Bitcoin grow in value, and it'll increase in value because more and more people will start to understand it. And that just takes time. And every time we go through the cycle, we have users come on to Bitcoin, and then we have some level of attrition rate. But there's a few new users that always stick around to understand how the technology works. And that's why in the net effect, it's actually good in all these cycles. And we get more and more users over time. So if you track wallet addresses on the Bitcoin blockchain, there's more and more wallet addresses being created over time. And now that may say there's some noise in that data because I could right now create 100 new wallet addresses. But over time, I think you're seeing a net positive growth regardless of that. And that even if I did create 100 new wallet addresses, I think if we see a ton more, the graph going up, where we could kind of filter out some of that noise, it's still a net positive.
All right, so it's the network effect. It's the same reason why I think Andy Warhol's art is crap and worth nothing, but there are too many people who paid millions for it, have to keep telling each other it's worth a lot. So Christie's will keep holding auctions.
That's right. I mean, it's the same idea. It's what we attribute value to.
Right.
So if we and art is a funny thing, right? It's like usually when the artist dies and they realize the artwork is rare, now suddenly those art pieces are worth a lot of money.
Fair enough. Awesome. Well, Charles, thank you for taking the time. Is there any kind of last resounding word of wisdom about this space that you would offer to people who are kind of just exploring it and don't really have a sense of what it's about yet?
Yeah, I think I've been teaching a college class, MBA class on this for almost 6 years now. And one of the things that I always tell people is that I teach a class that's 15 sessions, 3 hours each, and we barely scratch the surface. And now some people may say, well, that's a lot. It's like the old military saying, like, how do you eat an elephant? One bite at a
One
time.
bite at a time.
Yeah, one bite at a time. And that's what I say. What I recommend is if you don't understand this space, you're a skeptic, start reading some material to understand this. And the best way to do it, if you don't even know where to start, is to just play around with it. Send some Bitcoin, send $1 worth of Bitcoin on the Bitcoin blockchain, send it from one wallet to another, track it on the blockchain, see how this technology works. And that's how you enter the rabbit hole where you eventually start to realize, wait, let me read more. Why does it work this way? And that's when you start to understand it. You don't need to understand how the technology actually works, like I don't need to understand how a car works, but when I drive, like the first time I drove a Tesla, which made me realize why people are obsessed with the Tesla. I
Right.
understood it, and I tested out the autopilot and all of that. That's where there was an aha moment. And I think there's an aha moment too when it comes to Bitcoin and crypto in general, when you start to use it and understand where it actually solves problems.
That makes sense. And to use one last military analogy is a great phrase I use constantly, that there are few things in this world more dangerous than a second lieutenant with a map. So, Charles, thank you so much for your time. Fascinating topic. We've barely scratched the surface. We certainly did not do 15 sessions in 3 hours, but hopefully we've condensed a lot of that down really tight for
Yeah.
people who want to start out. And for my listeners, go get yourself a couple of wallets and swap some crypto around in it. While you're doing that, I adjure you once again to ignore the mainstream media who are lying to you on a daily basis and tune into Messy Times. Thanks a lot.
Thanks for having me.
Learn what Bitcoin is, how it works, and why it matters. Bitcoin 101, your ultimate guide to the fundamentals of blockchain.